Hey everyone, so in this video, we're going to talk about this kind of tactic that's actually really common in Hong Kong. Basically, they pump up the stock prices really high, and then suddenly, overnight, they crash back down. This kind of tactic has been really common in Hong Kong over the past decade or so. But now, these methods have moved over to the US. You hardly ever see this in mainland China. It's really rare there, but in Hong Kong, it's everywhere. And now, they're using these tricks in the US to scam a lot of people. This is basically a form of fraud. In the end, this always leads to big trouble. It always ends badly. But those people just don't care. Recently, a lot of Chinese concept stocks listed in the US have been like this. After going public, they stay at a high level and then suddenly shoot up. That attracts people to buy in, and then the price gets slammed down. The stock price drops 90% in a single day. So now, the markets that have to suspend trading are paying close attention to and questioning these micro IPO operations. Look, you have to know that getting listed in the US is easier than getting listed in Hong Kong. How does the system work in the US? It's disclosure-based, meaning as long as you provide enough disclosure, they won't interfere with you. Basically, you can't lie, and you have to put out enough information. So, whether people buy your stock or not, that's up to the investors themselves. This approach is called disclosure-based. In Hong Kong, the system follows the UK more closely, so the level of regulation is higher. For example, let me explain something to everyone. In Hong Kong, unless your listed company is really big, you need to have 25% of your shares out in the public. But in Hong Kong, people always find ways around the rules. Especially with mainland accounts, they can use loopholes to buy up over 90% of a stock. That's how they can push the price up to tens of billions. Remember Hanergy back then? That's exactly what happened. A lot of stocks are like that. They reduce the liquidity and drive the price sky high, creating a fake market value. Then they figure out ways to offload the shares. But in Hong Kong, you have to declare your beneficial owner for this kind of thing. Isn't that considered connected? If it's connected and over 75%, your stock has to be suspended. But now, in Hong Kong, there's no way to regulate it because you're using mainland accounts. They come in and buy, but they basically can't trace you. Mainland China won't bother with you, so what happens? That's how these crazy stocks appear in Hong Kong, right? Our very first crazy stock was Pearl Oriental Enterprises, before 1997. Pearl Oriental was speculated up to over 10 or 20 billion, and at the time, we were all amazed. Later on, some mainland stocks were pushed even higher, like Hanergy, which was speculated up to 230 billion. For a period, Hanergy's owner wasn't just the richest in China, but the richest in the world. Alright, according to a report by the Wall Street Journal, they interviewed some of the victims. One of them is Bratton Lindstorm, a university professor from Utah. Even university professors like him got scammed in WhatsApp groups. Someone pretending to be a financial advisor convinced him to spend $82,000 to buy this stock. He bought shares of Global Logistics, listed on NASDAQ under the ticker JYD, and sure enough, it skyrocketed in the short term. Let me explain it to you again. It crashed 88% in a single day, and in the end, he lost $80,000, only $2,000 left. Crazy, right? An 88% drop in one day, and you still couldn't sell. Another investor who graduated from a university in California lost $320,000 after talking to me. An investor from Missouri lost $54,000. These victims later formed a support group. 96 people lost a total of $9 million, got scammed out of $9 million. Look, this is the company holding the medicine. The company claims to be a global supply chain and logistics solutions provider. In early 2025, the stock price went up from $1 to $8, then in April it dropped back down to $1. Look, everyone, you can see it held that price for a while. Let me explain this to you all first. When it first got listed, there were very few shares on the market, so it wasn't hard for them to keep the price at that level. After they'd collected as much as they could, they started releasing good news. Let me explain to everyone. This is what's called releasing good news. With good news, you buy in, right? And the price really does go up. So, the more you buy, the more you want to buy. Actually, break time equals 0.5s/, as long as they've successfully released enough of their shares into the open market. They genuinely don't care about the price anymore, as long as a minimum of 5% of the total shares are out there. Then they start dumping, slashing the price, just selling off and crashing it down. When do they sell the stocks? It's when some of the shares have already been sold out into the market. Look, let me explain this kind of game to you. Because I used to be a market maker, but I never went as far as this. This is really ruthless stuff. Like I said, being a market maker is like those people who throw bottles, you know, the ones who toss bottles around. I've watched people throwing those bottles, and the people around are clapping, thinking you're really good at it. Sometimes, I'll toss one to you and ask you to throw it back to me, and then I'll catch it again. I pick one and toss it to you, and of course, I catch it again. It's really fun. Then suddenly, when the music plays, you realize that I don't have anything left in my hands. They've all ended up in yours. This one. That's the principle behind it. When you run these games, you keep buying and buying yourself, creating the illusion that a lot of people are buying. There are 3 tricks to get people to buy your stock. The first is when this stock goes up every single day. If it keeps going up every day, you'll definitely want to buy it. Once you buy it, you won't want to sell. If you do sell and it keeps rising, you'll end up buying even more. That's one way. Another way is when it goes up and down. If it keeps dropping and you buy in, then it goes up again. You make money, right? So every time it drops a little, you buy more. With this kind of pattern, the more you earn, the more you buy. But eventually, when it drops, a lot of people buy in, and then it plunges even further. This is the second and third way. People think that as long as I build up the value, right here, the psychological value, if you talk about practical psychology, the value is right here. But actually, if you push it up and then it drops down. If it drops down here, that's a 90% drop, and people will start buying. When you sell up here, there's a lot of hype, you know what I mean. Because psychologically, I feel like the value of this asset is up here, and it's been pumped so high. At that time, people might be cautious, but when it drops by over 90%, let me explain it to you with a stock. It was originally worth $1, and you pump it up to $200. When it drops down to $10, doesn't it feel like a bargain? You forget that it was originally only worth $1. This is all practical psychology teaching us these things. It's all a scam. They spread information through Facebook, Instagram, and WhatsApp, targeting retail investors. They invest in small-cap Chinese stocks. If the company is promising, it might get acquired by a bigger corporation or break through with high-growth forecasts, or even get bought out by Mason. In the short term, this pushes up the stock price. Let me tell you, this was back in 1997. I remember, my friend and we were talking about that stock with Quan Wingyi. He said it was going to be acquired by Walmart for $1 per share, but at that time the stock was trading at over $2. That friend told me to go all in and buy it, but I just wouldn't do it. So, what is this? Walmart is acquiring it for $1 per share, but now it's trading at over $2. Do you really think that people who know about this news would buy the stock at a higher price? It just doesn't make any sense at all, and in the end, of course, nothing like that happened. They were just dumping a huge amount of shares to gamble. The behind-the-scenes trading team dumped those basically worthless chips at the peak. You get it, right? They have to create some good news, paint a rosy picture, then push the price up for you to see. When you believe it and a lot of people buy in, that's when they crash it down, clear enough. Another classic example, Pheton Holdings claimed they were doing direct income, close-range radiation therapy systems, putting something inside your body to emit radiation and kill cancer. Sells, July 29, 2025. After just 2 days of trading, the stock price was pushed up to 31.2, and the announcement was made to raise the price for an immediate sell-off. Actually, everyone could see this coming. They would use this as an excuse. Since there were people shorting it, they immediately stopped playing around. The price dropped from 31.25 to 1.65, a 90% plunge, wiping out over 70% of its market value. 2.5 billion. 8 trading halts. Look, let me tell you all, I would never buy stocks like this. I absolutely would never buy stocks with a market cap of less than a few billion US dollars. You just can't buy those kinds of stocks. They're scary. Especially a lot of these IPO stocks. They always get pushed up at first, then keep dropping. I'm telling you, just look at this one. Look at that, at its peak. How much was it? From $30 all the way down to just over $1. That's old news already, right? It dropped 17%. It fell 97%. China Liberal Education, which does private education services, this is already dumb enough since the mainland doesn't even allow this kind of thing. The IPO price was $6, but the stock price went from $7.75 down to $1, dropping 87%. China Liberal Education's drop is toxic, you know. They push it back up from the bottom, bite it all back, pump it up again, then crash it one more time for you. Let's see if you get it or not. They sold it off here, sold it off at this point, say, from $7.50 down to just a few cents, then they bought it all back. They put it back in, make another profit, and pump it up again. Everyone thinks this stock has potential, that it's rebounding, so they run the same trick again to show you. Regulatory responses and risk warnings. The U.S. Department of Justice has set up a special task force. White-collar law enforcement is targeting collar crime. They're targeting the manipulators and trying to recover the victims' funds, but it's hard to prosecute these people. Many of them are from Hong Kong, I'm telling you, and some are in on it with people from the mainland. And they don't go to the U.S., you see. So now, does that mean there's nothing like this in Hong Kong? If they come to Hong Kong, they can't be arrested. In 2022, Finland issued a warning that small and medium-sized Chinese-backed IPOs had become a prelude to scams, urging for increased risk awareness. What about exposing those political and business figures? If people are being told to buy these things, you need to warn them, NASDAQ. Starting from January 2025, if a stock price stays below $1 continuously, it will be delisted. They're also working with other regulatory bodies to crack down on cross-market manipulation. The biggest problem with these cases is cross-market manipulation. Who are the people doing this? They're operating in Hong Kong and mainland China. They're trying to use facial recognition technology to block scam ads. There are so many scam ads out there. They're stressing that banks, law enforcement, and telecom companies all need to step up. Look, let me show you. There are tons of ads like Warren Buffett teaches you how to buy stocks or Elon Musk teaches you to buy stocks on Facebook. These kinds of ads actually exist. Facebook's regulation is really lax. Facebook is the worst in this regard. Many market commentators have pointed out that these micro-IPOs, because the companies are small and have weak management structures, are basically just set up to manipulate the market, pump up the price, and then dump the shares. There's no other purpose for going public. At the start, they can't even raise funds because no one trusts them. What they actually do is hold onto all their own shares and then spread rumors through social media and chat rooms. Retail investors buy in, and then they dump the shares, causing the price to plummet off a cliff. If the SEC and NASDAQ tighten their listing and information disclosure standards and speed up investigations and penalties for market manipulation, maybe in the long run they could restore market confidence. But the thing is, if you don't actually arrest people, if you can't catch these people, it's really hard, especially since they're in China or Hong Kong. It's really hard to catch them, and as for those people who can get listed so easily, nobody even knows who they are. This has really hurt confidence in the stock market. Compared to the US stock market, you really have to be more careful with IPOs here. In the context of China-US trade market risks, even the US Treasury Secretary Yellen has expressed concern. The Chinese really value their sovereignty, and when I say this, I don't mean to threaten or infringe on their sovereignty. So, what exactly is being discussed here? Actually, she was talking about India, right? She mentioned that if China continues to buy Russian oil, they might impose a 100% tariff. But she also brought up the issue of commercial fraud. But as for China, they don't help you investigate these scams, do they? According to the Wall Street Journal, many small and mid-cap Chinese ADRs have become targets of pump and dump schemes, meaning they're manipulated to drive up the price and then dumped in a scam. People buy in through social media, and then the stock price crashes. Because these ADRs have low liquidity and weak regulation, they're easily manipulated. So, apart from the few companies mentioned earlier, there are a bunch more that have dropped 50 to 90% in trading. For example, this one here, Luckin Coffee, and others have dropped 56, 17, 10%, and so on. Actually, the market cap of these companies is really big, like Luckin Coffee and the others. Surprised? Just Luckin Coffee alone is worth $2.8 billion US dollars. What kind of companies are these? $5.2 billion US dollars. These are huge. Of course, compared to the global top 100, these are still quite small. As for the U.S. Securities Exchange Commission, up to now, the SEC has not issued any specific statement regarding this sudden plunge. They haven't issued any special statement, but they are already closely monitoring, together with the Financial Industry Regulatory Authority, the extreme volatility and frequent trading halts of small and mid-cap Chinese concept stocks. They've issued a warning, saying people need to watch out for market manipulation. If you want to stop this, you have to arrest people. If the investigation uncovers concrete evidence, the SEC can take enforcement actions like suspending trading of your stock, issuing subpoenas for documents, and imposing administrative penalties. A lot of stocks get listed, and some of them are scams, especially those involving Hong Kongers and mainland Chinese. Let me tell you, this is the case. Is the bottleneck in cross-border law enforcement that it's really hard to obtain evidence from within China? Regulatory arbitrage. These small IPO markets are fragmented, and both brokers and exchanges lack enough resources to monitor everything. They're too small to keep an eye on so much. That means when investors, especially retail ones, trade these overseas listed stocks, the information they get is really unequal, making it hard to identify risks. Some people just think, oh, if a stock is listed on NASDAQ, it must be trustworthy. So how do you ensure a balance between capital market liquidity and investment innovation? So, how can you impose restrictions on these stocks without stifling the market? But I think, very likely, Donald Trump and his administration will treat Chinese concept stocks differently. Right now, I know a lot of people who are scared and telling me about going public in the US. Let me tell you, you might think,